Okay, well here's an important distinction. There are certain rental activities that could be considered active, okay, trade or business right off the bat. And then there are other rental activities that are considered passive. So how are rental activities defined? Okay, first of all, general definition, a rental activity is an activity in which the income is derived from customers paying for the use of tangible property. Here, tangible property can be anything from a 2-day rental of a cement mixer at a rental yard to a 1-year lease on an apartment at the beach. So, an activity can be pulled out of the passive rental activity qualification and become an active trade or business if one of the following 6 exceptions apply. First of all, average use of property. The average rental period for a piece of tangible property is 7 days or less. That will not be considered a passive rental activity. The second exception is where the average rental period is less than 30 days and substantial personal services are rendered to make the tangible property available for rent. Watch out here, a facts and circumstances test is applied to determine whether substantial personal services are rendered. The following factors are looked at: the type of work required, the frequency of providing services, the amount of charges allocated out to the rental portion on the tangible property and the charges related to personal services, etc. A third exception is where extraordinary personal services are rendered, in addition to the provision of the rental aspects of personal property. Personal services will be considered extraordinary when the rental aspect is incidental in comparison to the personal services rendered. The last exception is where the use of tangible property is minor in relation to the taxpayer's non-rental activity that they're paying for. The reasons these exceptions are important is you could be throwing off a loss from an active trade or business rental activity, and that will be deductible against your active sources of income and not limited to just offsetting your passive losses or qualifying for the $25,000 special exemption, or even needing to be called a real estate professional to be able to offset those losses against your active income. Another exception is where you have the non-exclusive customer use of property. That doesn't constitute a rental activity. Let me give you an example. How about this an example? You go to Costco. In Costco, there may be a hand truck available for you to use to get the goods that you're buying out to your vehicle. That is a non-exclusive use of property by multiple people that attend Costco, and as such is not a rental activity. Lastly, these exceptions also apply to an entity, where one of these exceptions is found at an entity level, a partnership, an LLC, an S corporation. The flow-through of that income or loss will keep the same character. If it was non-rental activity at the entity level, it'll be non-rental activity at the individual level.